Hey folks, so in this video we're going to hit on an aspect of business entities that I don't really touch on very often, but that's very important to understand. And that's the implications of having multiple business entities. Now, some people will create multiple LLCs for their different revenue models on the advice of their attorneys for asset protection purposes, and that's good. It's always good to consider the asset protection implications. But we also want to examine some of the tax implications and make sure we understand some basic things going into it. So number one, when you have multiple entities, if you have multiple EINs, which if you're going to create multiple LLCs, you're going to have multiple EINs. If you have multiple EINs, the IRS does expect you to file a tax return for each one of these EINs. Even if there's no revenue going through that company, they want something filed even if it's just all zeros. Now, the other aspect of this is the tax structure. Now, like we've talked about in previous videos, LLCs and Incs are legal entity structures, and they have different tax structures that they could be taxed as. And, obviously we want to pick the tax structure that's going to give us the most optimal result. One thing I can tell you is if you have multiple business entities, you do not want to have multiple S corporations. And the reason for that is, like I've talked about before, the S corporation requires you to take a W-2 amount through salary. If you have multiple S corporations, you're still expected to take a salary from each one of your different S corporations. And when you find yourself in a scenario like that, it almost never plays out favorably from a tax perspective. So other than that, if we have multiple revenue models and we're going to have multiple businesses for it, then each one of those businesses should really have its own set of books. A lot of people will consolidate their financial statements into a single set of books, but when you have multiple entities, not only is this impractical and inaccurate, but frankly, it's really more work than just keeping everything separate. I know that seems counterintuitive, but I've done a lot of businesses that have multiple entities, and I've done their books for years on end. And from a CFO perspective, which is what I used to do with my old company, that is just such an utter mess. You want to either have everything categorized into separate entities or just have different books entirely depending on your situation. So, just to recap, if you have multiple entities, the IRS expects a return file for each one of them. If you have multiple entities and you have multiple S corporations, each S corporation must pay you a salary, which is almost never favorable for you from a tax perspective. And last but not least, if you have multiple entities, you want to separate your books. Do not consolidate a bunch of companies into a single set of books, because sooner or later you're gonna not have fun, let me put it that way. I hope this was helpful. If you want more direct guidance on how to really get your business set up from a tax perspective, if you want to be a top performer and achieve your goals in the coming years, you need the best tax advice to do that, I recommend you go to rottweilertax.com/book and schedule a free consultation to see if it makes sense for us to work together. Thank you.